Okay, good to have everybody here today again on this channel. So we want to look at how we can actually master our Forex trading skills. So today I'm going to be sharing with you a kind of a recap from what we have been doing. We once talk about Forex as a story, trading Forex as a story. All right. So we talked about making sure that you can locate where the impulse is, and then you can begin to kind of mark that area, just like we have here. You can see some kind of impulse that the markets ran up, and then you mark that area. You look for other kind of indication that can show you that you can locate the order flow. Now, the order flow for this market now is what? Is bullish. The market is doing bullish trend. You can see here we have a break of structure here, and then the market goes up. So this alone is showing you that this market is what? Is bullish. Not only that, there are some things that we want to look at, and that is what you are supposed to write down in your trading plan. All right. So you need to find the institutional candle. So what we did around here is to look for institutional candle. The pair I'm using as an example for this class today is volatility 75 1x index. All right. So we can use any pair to explain this concept. It's the same. All right. So this concept is smart money. And so you have to think like the banks. And so what does the bank do? The bank kind of creates what we call institutional candle. All right. So when you want to find that institutional candle, you kind of try to do what we call a top-down analysis. That is, you look at the order flow from the higher time frame, say maybe one daily time frame, and then you narrow down to 4-hour time frame, and until you get to maybe a 1-hour time frame for those that want to swing their trade. Okay, but if you are not looking at swinging, maybe you are looking at intraday, or you're a day trader, you can begin to narrow down to 30 minutes and then to 15 minutes. All right, just to begin to confirm the order flow and be sure that this order flow from the top down analysis, that's from each time frame down, aligns with each other, or they have a kind of similarity that you can actually use to understand what the market is trying to do. All right. So here we have been able to mark out this. This is a volatility index, it's a synthetic pair. So we are not doing it on a super higher time frame like 4 hours. Though we have done the top down from that time to 5 minutes. So we are 5 minutes right now, okay, because this is going to move massively. So what we do is we locate the institutional candle and we find it around here. Okay, we once told you that institutional candle is always spotted when you see the order flow. The order flow is bullish, but the last bearish candle, what the trend continues, is your institutional candle, and that is already obtained on the higher time frame around here. Okay, so when we notice it around here, we now draw it out, we drag it out here to form our area of interest. This is our area of interest, and then we're able to spot this impulse on that time frame, on the higher time frame. This is a bullish impulse. Then when we narrow down to this small time frame, we see the break of structure happening. We also see this low. Okay, this low here has been repeated here. That means that we have an equal low here, showing us what? A kind of a confirmation of smart money, that smart money is going to happen in this place. All right. So you watch out properly. So by the time this place is repeating an equal low, yes, is repeating an equal low, rather, you see that there's also some level of break of structure again occurring, and a repeat of what has happened here. Because already the market is fractal in nature. That means the market repeats itself in a kind of, if you're a mathematician, we call it pseudo pattern, like a curve. It keeps going up and keep coming down, and you keep seeing similarities in the way the market behaves. So whatever has happened here has repeated itself here and giving us an equal low, and we'll start seeing break of structure again to the upper place. So what we do is to come and wait around this our area of structure. We mark out the point of interest. We mark out the point of interest because we are believing that the market will come around here to pick the order and then smart money will come in, and then market goes up. Don't forget, I said something that you have to note down. Rather, don't forget, there are things that you have that is worth noting. That is, you locate your institutional candle, which you have done around here, and also the area of interest, which is around here. Okay, the area of interest, the last candle before the bullish trend continues. So we mark the upper part of it and the lower part of it. That's how we got out the area of interest. So the next thing is to streamline down to the point of interest. Okay, before you get that point of interest, you begin to look at the character of the market. You see the break of structure, or you observe it, and then you look at it, and then we are able to mark out this point of interest. So this structure is showing us that we have a what? A demand zone. So we are getting ready to know where are we going to what? Move upward. So you can see now, so we now see that this structure is what? Is actually what? Bullish. So we are waiting for confirmation. And this is around a place. We are going to have a confirmation around here. If I were you, I would rather want to set a buy limit, because I don't want to really stress myself and give myself a headache. I'll just look at, what's it called? I'll just look at my equity and present a 2 or 3% or maximum 5% of my equity. I'll use it as my buy limit here, set my stop loss here to take 5% of my equity. All right. And then I allow the market to come here for what? TP. If that is taken, that means you have actually done what we call the smart money, the strategy. And also one thing you must note, even if you set a buy limit, okay, and it's activated and it keeps going into your zone, but it has not reached your stop loss, you can as well add more layers. That's called multi-gain layering. Add more layers of, of buy. Maybe you just put more position of buy so that you can have more peace by the time it's returning to play out smart money. Some people will want to see this area below this area of interest as a point of invalidation around here, as a point of invalidation. So for me, I like to place my stop loss around this point of invalidation, just below this area, because I want to give it enough allowance should in case smart money is trying to take out retail traders before playing out. So now, thank you. I hope that is very clear. So let's now see how this very smart money play out after we have traded this setup. Boom. You can see this. You can see this. So you see that the markets actually respected our level, our point of interest. Okay. So if you have done your invalidation here properly and you have placed your stop loss around here, you have nothing to worry because the market did not even get there. The market only broke into the point of interest further. So here we apply multi-gain layering. Here you will have, it will have activated your buy limits, and around here you load more position, buy position, and here again you load more buy position, and then what do you see? You see a what? Smart money playing out, and then you are able to cash out maybe 100 pips, 50 pips, depending on what you have here on your RRI. Yeah, this market is already giving us a IRR of 15 to 1, which is profitable, which is reasonable enough for you as a trader. You could get this in a day and then leave it till another day. You come back and trade. All right, and it may even take you maybe 2 days before it eats the profit. Some people might want to be, very, very conservative with their losses, and maybe their risk appetite is very low. After they have entered this trade, what they want to do is move the stop loss into profit. Okay, once they see that this market has run up, okay, and is buying around this place, because this place here is showing you a junction, so you may not want to break this junction. So what they do is that they put a stop loss around here, in case this thing does not break this place, it can come back and then take them out here in profits. But if it breaks it, it keeps going and keeps going and it keeps going till it takes their what? TP. So that is smart money for you. And I hope that you'll be able to put this into practice. You'll be able to, itemize this, analyze it, and be able to understand how the market repeats this kind of strategy every day without you ruling or without you trying to mark out these areas. You might not be able to see what is going on. So I will encourage you to always have your tools ready. So maybe on TradingView, and then being able to draw out these lines and then be able to interpret them, and then you are going to be able to execute your trading plan. Thank you very much. So this is the end of the seminar. I hope you enjoyed it. If you have any question, please feel free to write out your questions in the comment section, and we'll be able to attend to them. And if you want to also do some other topics that interest you, or if you have done some trade before and then your smart money is not playing out well, perhaps you don't understand it, perhaps there are areas that you need clarification, please feel free to drop it to the comment section. Thank you very much, and have a wonderful day.